Good afternoon. It is December 5th already, 2019. This webinar is a continuation of the one I did a couple of weeks ago where I talked about pivots, and I'm going to cover that. But it's primarily about, or the webinar is primarily about a chart that I put together, and it's really just a modification of a chart that I've had for quite some time. But I simplified it for my own use, and I'm going to point out how I use it. If you look at your PDF file, you'll see that let's see if I have this here. I've marked up a chart and things that I'm looking for. Let's see how it turned out on the PDF. It looks all right. Let's just talk about this a little bit right now. These green lines represent a low pivot pullback, and in the filter, the price of the security, whether it be a stock or an ETF, has to be at least in the off the low, or 30%, I believe, is the range that I required. So sometimes you'll see a stock come down, it won't generate a pivot or a green line. It's because it didn't make it up to the 30% on the daily range. But generally, that has worked out very well. So the green bars are all low pivots. I'm using the 3 and the 6, which I've used for quite some time for short-term momentum. If you look down here, you'll see that it says micro trend, the 3 and the 6, and then the short-term trend is the 6 versus the 18. These are the histograms that represent these moving averages. So as these lines move apart on the 3 and the 6, the histogram, of course, will be getting taller. And the same thing goes for the 6 and the 18. Now I have the 50 in here too, because many times a stock will bounce off the 50-day, but primarily I'm interested in these 3 moving averages, and I'm also primarily interested in stocks that are going up. The whole theory behind this is we're looking for an established primary trend, and I marked this. I'm using the 6 versus the 18 as the primary trend, even though it's a short-term trend. I'm not looking at the long-term moving averages. So I'm considering this to be the primary trend, this to be the secondary trend, which is the short term. So if you have a stock where the histogram is remaining above the 0 line, I consider that primary trend to be up. And then if it dips down below on the short-term trend or the micro trend, and this histogram turns red, that is generally I shouldn't say generally, but it can be a buying opportunity. But you let the stock come to you. Now this is Dorian. This is a stock I was in a couple of weeks ago, and I think it's still doing well. In fact, I mentioned it today on the board. Here's the PDF for people that just came in. And I think it's kind of stalling out, but it's another shipping stock, CMRE, which I am in. That's a sister stock, and both of them have really good earnings. So you can see here was the dip, and here is the green line, and the buy point actually would have been right in here somewhere, but the stop would have been down below, a few cents below that. So this would have been an excellent trade had you been using this technique at the time. Moved up, what do we have here? We have another pivot, and you can see that demand and supply here shake out. Look at the long wick here, and what did it bounce off of? The 18-day exponential moving average. And any stock that bounces off or near the 18-day exponential moving average, I'm considering that a bounce play. That's a term that Ian used to use, and I'm using that terminology, and I think it fits very well here. On the other hand, a stock does not have to come all the way back down to the 18. You can see that this right here on Dorian was a good play, and it just moved up and it started moving up again. Now, what I don't like to see is too many candles showing new lows. Generally, a couple is all I like to see, because sometimes it can be a trend change, but you can see the moving averages really didn't turn down here. This histogram did not turn red on here on the short term, and this, there was still a lot of strength between the 6 and the 18. So this worked out very well. I didn't see it right here, but I got it somewhere in here, and I made a few points out of it, so it was a good trade. Anyway, this is what I'm working on and sharing with you, and here's a few thoughts that I just put in here today. I would have put more in, but I said, I didn't feel well yesterday, so I didn't get a lot done. So I'm just kind of winging it here, if you don't mind. Okay, I'm going to. I don't know if anybody else came in or not. I'm going to post the PDF again and then move on. Okay, so I'll get this out of the way. One thing I do want to point out, people that join the Insiders Club, when you join, or this applies to anybody who's already a member. If you go to Member Services, that will take you, let me see if I can bring it up. It'll take you to an area where you click and you log in, and then you'll find the Insider Club. I keep getting this message. I haven't figured that out yet. Anyway, the next newsletter today will be in December, but if you just download this PDF, it contains a whole bunch of my videos. In fact, some of these videos, this is just kind of an evolutionary thing. I would just pay attention to the more recent videos, actually, but you will always find the link to the add-on here. It's going to be in red. Raymond, I'm going to talk. We're going to talk about both the daily and the weekly chart. It depends on what you want to trade. Anyway, the link is always in here. I update this whenever I do one of these webinars, so you'll always find the latest information. Anyway, getting back to the longer term trend and what your stomach is, you can certainly use the weekly chart and then look for entries on the daily chart. And if you have determined that you're going to use the weekly chart to help you stay in a trade, that's what I would do. 2 lower lows in a weekly chart would certainly get me out. But like this here, I mean, if you're in this stock at 28, you get a weekly chart like that, you don't want to get out. It didn't even establish a lower low here, and then look at what happened with this stock. But as I go through these charts today, why don't we just talk about that? Okay. First of all, the charts. Well, that isn't what I want. I want to click on here. You're going to find these charts that I've modified. It's number 4 under the daily IR expansion and contraction charts. I have end of day and intraday. This is the intraday right now. If I go up to the end of day, they're different because I have different information in them. George, your microphone's on. I'll turn it off. So in this area here, this is called the warehouse view. It's an indicator, and you can put anything in this view right here that you want to. And that's very nice. So you can lay out a chart and lay out your warehouse information, and this is the information I've included in the daily chart, and I'm going to go through these and tell you why I did it. Okay, let me go to number 4 on the daily chart. And let's talk about this one first, and then I'll come back to the intraday chart. I'm going to make this a little bit larger. But my thinking was that at the end of the day, when I'm prospecting, I want to know the relationship of the closing price to the 3, the 6, the 18, and the 50-day moving averages. And I can look over here, but this way I get a percentage and I know exactly where we are. The EMA fan uptrend, of course, this also uses the 200 and the 100 day exponential moving averages, and I know that this stock is in a fan uptrend. So I know I have strength, and if I get one of these pullbacks on a pivot, the odds are that the stock is going to, if buyers are coming into it, it's going to continue going up. Doesn't always work out. You can never say with absolute certainty, but if you control your risk, there's a good chance that the stock will continue its trend. This is the range as of yesterday. This candle right here closed at 46.15%. That's well over the 30% that's required in the filter. You can see that the volume on the moving down, this volume bar was a huge spike yesterday. Very heavy volume on this. I don't know what the news was on this stock. I haven't looked, but I can immediately see that the volume was extremely heavy. It's only 8.5% off its 52-week high, and in the range, the 52-week range, it's 85.66%. This stock has already traded up over the last 12 months 108.1%, and it closed slightly below the 18-day moving average. Now, this could be considered a bounce play today because it's right around the 18. It actually penetrated it, but it is bouncing back. The float, 66.9 million shares. Float turnover, 256 days, and I'll explain that as we go along. Earnings due date, always important, and I want to know the exchange. Most of these stocks that make these huge moves, you'll find on the NASDAQ rather than on the NYSE. The more speculative stocks are generally on the NASDAQ, but I just decided to put that exchange information in there. And now let's go down to the same chart with the intraday. Mostly different information, but not always different information. Here's the date. Here's the last update. This is Eastern Standard Time. Here's the last price. Here's the high, the low. Well, last high and low. Here's your percentage change on this today. Intraday range is trading at 96.40%, near the top of its range. Volume is running above normal. You can see that down here. And this information is from yesterday, the 52-week high, and so on. That doesn't change until you update. Float's the same, float turnover is the same, earnings due, and the exchange. This information up here is current, of course, because that's what I'm really interested in intraday. A couple people came in. I'm going to post that PDF one more time. Okay, so let's take a look at some charts. Who's not familiar with float turnover? If a stock's float, the number of shares outstanding, turns over rapidly, it means there's a lot of interest in that stock. I guess everybody pretty. Okay, Perry, I'm going to talk a little bit about float. Now, I guess the best example of float turnover right now, and I'm going to go to a different chart, is we'll go to our old friend Roku. And this is a stock that is, in my opinion, very heavily manipulated. Here's a downgrade one day by Morgan Stanley. Here is an upgrade the next day by Needham. And what happens? These traders just jump into it. And I can tell you right now, they don't stay in very long. How do I know that? Because, and this is a chart that's in my files. If you go to float analysis charts, and you look here, I'll just go to a white chart with, well, let me go to this chart right here. Float turnover chart white. The float for Roku, let's see if I can find the right window here. The market cap, there's 117 million shares out. The float are tradable stocks, tradable shares, over 90 million shares. Institutionally held 53.1%. This stock is turning over its float every 3 days. I have seen one shorter than that recently, and that was Beyond Meat. It was turning its float over in a day. But it just means the activity. So if these stocks, if a stock's float is turning over that rapidly, it means people are getting in and out of those shares in a hurry. At least that's the way I view it. This gray area over here, forget this one, that's today. But these last 3 days here, this is calculated at the end of the day. This shows you how quickly the shares turn over in this stock. So that information is right here. This is why I included it in that chart that I'm pretty much concentrating on today. Interesting. Let's was Beyond Meat, BYND. Yes, it is. Okay, what's the float turnover on this now? Well, it's up to 16 days. So, as it came down, people lost interest in it. And maybe I didn't see it one day, but this box right here, I thought I did, but I could be wrong on that. Right in here, these are 2 float periods here, and you can see how quickly it was turning over right here. Now let me go back in time a little bit here when everybody had to get into this stock. I don't see where it was. I thought it was one day, but I could be wrong. But still, when it's turning over this quickly, it just tells you that traders are getting in and out. This is the float period, the most recent float period, and if you move back, it shows you the prior float period. I don't use these charts very much, but they're in there for you, and maybe I'll have to do a refresher on them, but it's interesting. So, let me go back to my original chart here, intraday. These are under float analysis. There's 4 charts in there. Okay, here's the intraday chart. You can see Beyond Meat clearly has been under distribution using this method that I'm talking about with the moving averages. Let's go to Roku. And then I'm going to look at a bunch of stocks that I put in a folder. Paul, I've got some screens in there. Anything under 50 million is pretty good. Let me take a look at that here in a minute. If you just do a search, okay, I don't want it on the charts. I want it in the warehouse. Now, this is less than 50 million shares here. Dan Zanger, you've heard of Dan Zanger. He's a well-known trader. Made a bundle back in the 2000s. Anyway, this is his criteria. And let's just take a quick look here. I can't remember. Okay, he limits his float to less than 60 million. The shares out have to be between 15 and 75 million. Okay, so he limits the number of shares out, and he's got a strong growth requirement in here. So, that should give you an idea. And let's just, while I'm in here, let's just take a look at a couple of stocks. By the way, on these warehouse views, if you're as soon as the market closes, I'm going to stop the update here. I use this search function all the time. If you can remember a keyword or part of a keyword, it eliminates looking at a bunch of warehouse views, and you can go directly to where you want to go. So I'm going to click the X, and then everything comes back. Let's just look at one of Zanger's qualifiers here today. I'm not crazy about this weekly chart. It's kind of all over the place. But this information, is this, let me check something here. Bear with me. Something's wrong here. Did I not get the filter applied? Because this one here is saying I may have discovered an error. I haven't used this for quite a while. 68. Okay. Float 44.8. I was looking at the wrong thing, I guess, or a different chart. Here's his float, and the float turnover is 77 days on here. So that fits within the filter criteria under 70 million. This is an ungodly loose chart, which I would prefer not to trade, but you can see that it worked out pretty well. I wouldn't touch it right here. What did I do now here? As it's coming down here, it's just coming down too hard and too fast. But what do we have here? We have a low volume test, a confirmation of this test. Many of you call that a J flag. You can see the histograms are well below the moving, well, they're below the line because the moving averages have all crossed over. But this did work out. The buy point would have been right in here. And here's another one. The buy point would have been right above there. Here's another one. Buy point, well, here's an early buy here. Here's a so-called confirmed buy. Let's see, here's another one right, well, this would make me nervous taking that. I prefer to find stocks that are a lot smoother than this. But you can see over and over that these pivots do work out. Let's see. Some people came in. I'm going to post the PDF again. So Paul, play with this a little bit, and it only pulls up 68 securities, and you can find some stocks that have a relatively low float and also high earnings requirements. Let's just look at one more. I'm just going to go to St. Joe Company. Once again, a pretty loose chart, but you can see that there is a a reversal here on the weekly chart, and it came down this week, but it's now trading near its high. Just I mean, I don't really even look at these stocks. They're just when I see a stock that's volatile, I just move on, and I think most of you feel the same way on that. Yes, you can make money on them, but it really takes nerves of steel, and if you're putting stops in, more than likely you're going to get stopped out. I'm going to go. By the way, have any of you been looking at the IBD Innovator 50 and the breakout candidates? They didn't update that thing for a month, and now they've updated it again this week. If just as a quick review, I don't want to get diverted too much, but it's actually an ETF, which is in my market timing group also. Let me show it to you before I move on to those other charts. I'm in all securities. You will find these under the ETF module. The Innovator ETF scans. Whatever this company is, they put these stocks in an ETF. And like I said, they didn't update it for a month. And now they've updated it again, but these are stocks that are in here. There are 49 in the breakout candidates now, and there are in the ETF 50. There are 50 stocks in here, and you can just go in here. I don't know where they if they take this information directly from what they get from IBD and MarketSmith or where they get it, but it is a ETF, and these are the individual stocks. And the way I explained this before, but let me do it again very quickly. The way I got to them is I was just looking around in HGSI, and I'm always discovering new things, of course, but here is a reference group that goes directly to that ETF. This uses the group member function of HGSI. If it's a group member of this group, then it pulls these stocks up into the warehouse view automatically. And this is intraday today. Let's let it update, and I'll make this full screen and we can see. So CDLX is a Zanger stock. Thanks. Okay. All right, so what do we have here? You can see that these are all familiar names. If you pull this up and look down here, I don't think I see a stock in here that I don't know about. But if you use the intraday function on this, you can find which of these stocks are moving intraday if you're using Thinkorswim as your driver or your data driver intraday. This works beautifully for something like that. This is the Innovator 50. I'm about ready to turn this updating off. We're getting very close. I need to look at something else. Come on. And here is these are the breakout candidates. And you'll find some crossover, of course, but these are a couple of scans that are related to stocks that generally would be followed by the CanSlim crowd or the IBD crowd. So, yeah, John, that's fine. You can. I'll be sending the video out. I don't know if you're on the list or not, but I'll make sure you get it. Okay. Okay, let me go in and turn that updating off so it doesn't drag me down. I should have turned it off earlier. As soon as that hourglass goes away, we can proceed. Okay, now I'm going to go into a group of stocks. These are pivots. Some examples. I want to go through them. And I'm just going to go up to my scorecard view. And we'll look at some of these charts here. Okay, Restoration Hardware. This has been coming up for a long time now. And you can see what it did today. You can see that there was a pivot here. 1 day down, effort to fall, and then here's your pivot right here. Closed well above the 30% area on the daily range. And what happened the next day? There was an effort to rise. The buy point, I like to use the just above the high a little bit from the pivot point. This is going out too far for the so-called confirmed pivot. I think what I would prefer to do is buy part of a position just above the daily high and then add to it. Like I mentioned before we started, some of you are online. I'll take a 40% position as my initial position and then do a 20-20-20, and I'll put buy stops in above where I just put it in Thinkorswim and put a stop in, a buy stop on each of the levels. And that way, by taking a 40% position to begin with, I'm not all the way in. And if it proves itself and continues to go up, the other parts of the trade will be added automatically. And then I just adjust the stops as I go up. It seems to work very well. I mentioned earlier that that's evidently what Jesse Livermore did. He would rarely take a full position. I'm certainly no Jesse Livermore, but anyway, he didn't like to put a full position on and then have it go against him. So he took a partial, made it prove itself, and then added. But let's take a look at this. What do we have here? Coming off the 18, a bounce play. What do we have here? Coming off the 18, the brown line. That's a bounce play. When the both of these histograms are going down, I'm certainly not looking for a long trade there, but going through the low pivot screen, this stock would have shown up here, and actually it would have shown up here too. Both of those would have been good trades because your stops down here, a little bit higher on this. So you would have been in for this run. But you can see all of these instances of the low pivot. Here's a low pivot too, but you don't buy this because it never takes out the high of that day or the prior day's high. So it protects you. Just because a pivot shows up, it doesn't mean you want to buy. Now these rose-colored lines, that is actually a high pivot. You can see that this has a wick up here, and the pivot, what this means is if it takes out this low would be an early entry. This would be a confirmed entry to the downside. But generally, a stock like this, I certainly wouldn't be trying to short it there. But that's what they're in there for. The pink ones are just high pivot reminders, and they have to take out the lows to be valid. I don't think most people short these stocks anyway, but I just decided to put them in the chart. Okay. Okay, so that's one example of a recent pivot. This is okay. Here's an example of pivots, but there are 3 down days. You certainly wouldn't take that trade. Here's another pivot here. Notice where this stock ends up, right at the 18-day moving average. And here's a pivot, excellent pivot call. Well, this would have been a good one too. If you take it the following day, this would have been good. Obviously, this would have been excellent, but well, there were 3 days after it happened. This must have been earnings news right here. But that was your low pivot. You can see the wick below. Certainly wouldn't have been stopped out because it's below this. Now let's look at the rest of the chart here. The histogram, this had stayed positive after this area here. So this is your secondary trend. This is a primary trend. The primary trend didn't have much oomph behind it because the moving averages were together. But they both stayed positive, and then of course you get the big spike up with the big move up. But look what's happening here. We're getting multiple pocket pivots, and this okay, here's your first pocket pivot right here. On this day, there's a second one that day, and then the big up move this day. Lots of these pullbacks or pivots here. Really hasn't done much, but look what happened here. Where did it come down to? Came down to the 18 period exponential moving average and bounced off of there. And here's a day in between this gap up here. But this is a consolidation period. You can see that what I consider the primary trend remained positive. The secondary trend did turn negative, but with a buy stop in above that, you would have been filled on that, or somebody would have been filled on it. Here's Alibaba. Anybody in Baba now? Piers, I know you've been kind of in and out of this stock. Anyway, it's a loose stock. The weekly chart eliminates a lot of noise, though. If you look at the weekly, you can see here's the low volume test, confirmation of that test, or a J flag. Here's another low volume test. And there are multiple pivots here with the histograms being positive. Now, in this area here, during the consolidation period, you're going to see this a lot. You're going to see the 3 versus the 6 come down to near the 0 line or below the 0 line. But this here, the 6 and the 18 versus the 18, this has remained positive. So you're still in an uptrend, and you're looking for potential trades. Tell you when to get out when you get uncomfortable. There's no reason to get out now. Where'd you get in, Kevin? Have you been in a while? Okay, you got it at 189. Well, you got a nice profit in it. You had a pocket pivot today and an effort to rise, and up bar closing high on the. Yeah, there's no reason to get out of this stock right now. It's if you use the weekly chart, of course you would give up everything you've gained if you used this area down here to get out. But this stock is really what's called in play now. to the upside, and I can't tell you where to get out. It's just whatever you're comfortable with. I would personally, what I would do is I'd put a trailing stop in. Did you use the spreadsheet to determine your original risk, or did you just buy some shares? Okay, not this time. What I do is if I'm profitable in a stock, uh, I will put a trailing stop in for the amount of my original risk, and then just let it go. And if I get stopped out, fine. It's not the ideal solution, but at least you're not taking profits. You'll never make any really decent money if you're always taking profits on short moves. And I guess I shouldn't say that either because it's just your style of trading. But most people want to hang on to a stock, and that's what I do. I can't tell you what to do on this. It's loosey-goosey, but it's, it looks like it wants to break out to, let's put a crosshair on here and let's make this a monthly chart. It's just about at the point where it's trying to break out to an all-time high. And I hope it does for you. But like Paul says, yeah, normally I do, but I mean the last are you on the below the last 2 week low, you're going to give up, you know, everything that you've made so far. If you wait for that, that would be down at the 187.84 level. Are you willing to do that? Because on BABA, you can see how, you get these big down weeks. Yeah, Carrie, you're probably right. I thought you were babysitting, Carrie. Uh, but I wouldn't give. Okay, tell you what you can do. I don't know how big of a position you have, and I'm not going to ask. But if you want to hold for a big move, you could put a trailing stop in on part of it and then just hold the rest. How does that sound? That way, if it goes down, you're going to capture a profit from the short term, but you would still have a position on. Stops are actually, we use a lot of stops. Stops are actually one of the worst things you can do, to tell you the truth, because so many times you'll get whipsawed. But on the other hand, I'll look back at a lot of trades, and if I hadn't taken a stop, I would be well underwater. So, there's really no easy answers. I like the trailing stop concept, but if you want to hold it for a longer period, why don't you try that? Take part of it off and capture some profit, and then just let the rest of it go. But then if it goes down here below a 2 week low or something, then you just get out, but you haven't given everything back. Hope that makes sense. Okay, let's move on here. Let's try to find some tighter charts. Okay, here's a stock I'm in today. Paul's in this one too. I don't know if anybody else is. This is Costamare. I believe that's how you pronounce it. Look at this earnings growth here, and there's big projected earnings coming up in the future. Marine shipping. The group was going up. It looks like there was a little profit taking at the end of the day today with this upper wick. But this is the kind of stock I really prefer, rather than stocks that jump all over the place. Look, now see, on the way down here, you wouldn't have taken any of these trades on these pivots. This one, you would have. I didn't get in this low. I didn't, well, I wasn't doing these pivot scans at that point, but this is a perfect setup. Both of these histograms went down, and then this one, obviously, when the moving averages crossed over, it turned positive first, and then it was confirmed right here. But the buy point, the original buy point, would have been in here down around the 609 level, and it moved all the way up. I must have my mail open. Close window. And here, wouldn't have bought it here. Here's another buy right here. Here's another buy right here. Wouldn't have been stopped out. And this one right here is the last buy. Now, why wasn't there a pivot here? Because it didn't get up to the 30% of the daily range. That's why a bar was not generated. I've been in this stock the second time I'm in. I was watching it set up. I mentioned it on the Skype board yesterday, and I said it's setting up nicely. I put a buy stop in right here yesterday. Whoops, sorry about that. And, I'm profitable. I'm not extremely profitable, but any profit's a good profit, right? But I prefer these nice, tight charts. It wasn't very tight here, but you can see that this was a shakeout. I don't know if this was an earnings shakeout or what, but there's a long lower wick and buyers stepped right back in. So supply intraday and then demand overcame supply. It still kept drifting down, and I would assume the reason that it drifted down is because the group started coming down. These stocks have a tendency to all track together. These, not all of them, but the majority of the good ones. So look at the group here. Kind of paused right here, went up, and then the group rolled over, so this stock came down. Here's another pivot buy. Let's see, well, this is where I got in right here. Anyway, you can see how often these pivots do appear, and I like to have them going up. I like to have the histograms, at least this one, positive. But just use your own judgment. These VPA flags generally work pretty well. That's here's a negative flag. Here's a negative. This is a mixed flag with the transfer of ownership, negative flag, but then it held above the 18. This could be considered a bounce play here too. Okay. Here's Costco. Now, I don't know why I have Costco in this list, but it's obviously broken down. You can see the moving averages all crossed over, and the histogram has turned negative. It consolidated for a long time. I don't know why that one's in there, to tell you the truth. Alabama. Okay, Nike. Let's take a look at Nike. Okay, the other day there was a low pivot. You can see it went down with its group, and then here was your buy point right in here, and it's had a nice move up. This histogram never did go negative. So when you're looking at these charts or doing these screens, make sure that you look at not only the histograms, the pocket pivots, look at the group, because the group, how did I generate these are all stocks that I've been following recently. I'll show you, Perry. I'll get to that in a minute. but I've been adding to the group as these have passed through the screen. So let's go to the screen. I think I've shown you enough chart. Let's do one more. Crocs. I know some people got into Crocs today. Paul, you're in Crocs. I think Piers got in Crocs too. And here's your low pivot here. This one actually got below the histograms, and now it's turning positive again. But there were VPA flags here. It got well below the 18 also, so this is not considered a bounce play. But there were multiple signals here, and VPA primarily. And it followed through, and now it looks like it's trying to form an uptrend. Okay, to answer your question, Perry, you weren't in the last webinar I did, but if you go in here to the quick pick and just type pivot, you're going to get all these pivots that come up. These are the pocket pivots. They're different than the low pivots, which I'm looking for, which are the low entry, or the relatively safe entries. So I'm going to go get out of this folder. I'm going to go to all securities, and to do that I hold my alternate space bar. And what happens is this 2019-12 pivot list, which I put together, becomes all securities. And what I'm looking for are low pivots. And here's the intraday low pivots from today. Primarily, I'm interested in stocks number 2. Stocks intraday with the fan up. With the fan up, it means the stocks, well, here, let me go to a chart above this. Here's your fan. These moving averages are all in order. Here's the 200, the 100, the 50, and then the 18 is up here. That's the green line. So the fan is in place. And I like to look for stocks that are pulling back, that are in a long-term uptrend and are pulling back for a low-risk entry. Rather than chasing stocks, this is a much safer way to do it. Now, Gil Morales does something similarly. He calls it an undercut and rally. And this would be an undercut and rally here. Look at the pocket pivots, a couple of days of them. It undercut these moving averages, and it's moving up, and I'm still on Crocs. Let's look at, this one's a little bit loose. But if I go back to this number 4 chart here, the chart that I put in, you can see that here is your low pivot. It's unconfirmed. It's confirmed when it goes through the high of this bar, or if you really want confirmation, you can wait for this one, but that's just too far away. What I would do on this is I would take a partial position, or about 2 cents, maybe a nickel above the high of this day, and then I'd put my buy stops in above that and let it get filled on the way up, and then I would have a full position. Let's look at this one. So these are current pivots, Perry. Low pivot unconfirmed with a fan up. You can see this stock is moving up. It's had a little pullback. It dropped back. This red circle means it's a transfer of ownership. It was being transferred from weak hands as the wick got real lower, and then the strong hands came in and started buying it. This is kind of a neutral VPA flag. And Paul says save stock to group. Okay, so when you're prospecting like this, quick add to group, I'll just put it in my Well, I have a prime watch list. I haven't looked at it for a few days, but I'll put it in there. But this is a candidate for tomorrow. It was actually a candidate for today if you're watching the unconfirmed or using the intraday screens, because the buy point, the initial buy point's right above this wick right here, and you'd be in, but it's not too late for this stock. Let's look at the weekly over here. Multiple weeks it's gone up. Here was a price rejection here, no demand, but this wick on this weekly chart represents what has happened on the last, since the beginning of the week. The last 4 days, 1, 2, 3, 4. That's what this wick represents over here. Could you show the quick view for current warehouse view? I don't know what you mean. Oh, the quick pick. This? Is this what you mean, Perry? Okay, they're all right here. Now look at the difference in this. Low pivot unconfirmed. If I click on that, there's 203 stocks. I don't want to look at 203 stocks, but I may look at this just because there may be some turnaround stocks in here, and I'll look at the ones that are going up in the morning. I'll go through the top 10 very quickly maybe. But if I want to limit myself to fan up, this is the end of day look. This is the intraday look. So I know these stocks have a fan up. If I catch them early in the day, I'll look at them and maybe put a buy stop in. If I'm prospecting before the market, I'll look at this. Look what's on top. The most in demand as of last night was St. Joe Company. And as I do the intraday, it is the number one stock intraday based upon my combo ranking. So as of last night, and I didn't notice this before, I'm just fan up. This was end of day last night, and St. Joe Company was on top according to this combo, or the demand. It was the most in demand stock, and it just happened to follow through today. Closed at 98% of its daily range on 124.8% of average volume. But here is your pivot, and there's the buy. Now this probably gapped up on earnings back here, and then there was profit taking. It got too low here, or it got low enough to attract buyers, and then it followed through today, and here is your buy point. But this buy is a lot less risky than this buy. Okay, how would I follow a stop on Joe? Well, if I were in it, I would know my original risk from my spreadsheet, and I leave my original stop in place until I achieve what's called 1R, or one reward, and that's something else that's in the program. And I don't know if you're familiar with that or not, Kevin. But as it gets up to that point, then I would trail the stop, because I'd like to have a break-even stop at least. Okay? Let me show you this. I'm just going to go to, I'm going to clear this out. If you go down here to this position sizing and risk charts, there's a risk chart, long trades, risk chart, short trades, and this is position sizing. If I go to risk chart, long trade, what it does is it gives me room up above here. Let's say I bought this stock. What am I doing? Alternate A is what I want. I use the the keys. If you go to this R right here, this is your risk. Let's say that screwed this up. Let me make this bigger and see if I can. My original stop would be right down here, okay? If I bought it here. So here's my buy point. I pull this. What am I doing wrong, Paul? I haven't used this for a little while. I usually just take it off the spreadsheet. Okay. Have you been using the R tool? Okay, here we go. There it is. I started in the wrong place. I click down here approximately at the low, and here is the buy point, and then each of these levels is an R or reward. So let me do this again so we can see what I'm doing. So here's the buy point. I'm only risking 312, and then here would the first reward would be R level would be up here. At this point, I would take my original risk amount and just start trailing that stop. Does that make sense? Maybe we need to do a session on this. I'm already over an hour, but that's what this tool. I asked Matt to put this tool in here. So if you get a stock that's really moving at each one of these reward levels, it's risk level here and then reward levels here. If you get a stock, if you get lucky, if you're a good stock picker and it really moves up each time, you would attain a new reward level. You could just move it up manually to the previous R level. And then work it up. But rather than doing that, what I prefer to do, and I don't know if my way is the best way or not. I prefer when it attains this first R level, I prefer to put a trailing stop on with my original risk. And the reason I like to do that is because you'll see a lot of stocks that can shoot up and then they'll come right back down intraday. And if I have a trailing stop with my original risk amount, then I know that I'm going to preserve a lot of those profits. I can always get back into a stock, but that's what that tool is for. Well, I don't know if we'll do a whole session on stops, but I guess we could. We could use Thinkorswim, and we could do buy stops. We could, there's a lot of stuff we could do. Well, I like to keep it as close as possible, Perry, but sometimes I always put it below the low pivot, and if it's let me find another stock here. I'll go a little bit over. See, this compresses it, this chart that I use here. Here is a let's look at just a daily VPA. Here's what the chart looks like normally. That's not a stock I'm interested. Let's look at Salesforce. That's a well-known stock. Okay, here's the pivot from yesterday. So, this one, if you're using yesterday's high, this one is still not a buy. Why can't I find one when I want one? Well, I can't find a good example right now. Let's see what the buckle looks like. This is a Nebraska chain. It's holding up. It's making a long loose flag. Sometimes Perry, I'll risk 7%, but it really 7-8%, but it really doesn't matter because if you're using the spreadsheet, and by the way, are you using my spreadsheet? You're probably not. Okay, well, I need to get it to you. Uh, if you're using the spreadsheet, you're risking the same amount, and you're just going to buy fewer shares. And so it really doesn't matter how much you're risking because you know the dollar amount that you're going to risk. I'll get you that spreadsheet. I'll try to do it tomorrow. If I forget, send me an email, will you? Because I think most people that are on this, not all of them, I know not all of them do, but most of them, I believe, use the spreadsheet. And really, what it does, well, let me see what I've got here. That's the wrong spreadsheet. We'll go just a couple minutes over here. Since my wife's out of town, she doesn't. Okay, this is my spreadsheet. No, I'm not making big trades. I don't trust this market, to tell you the truth. I'm just making small trades now. But this is Crocs. I didn't buy Crocs today. I know some people did, and no, I did not fill in for Crocs. Here's Crocs right here. What I do is I just copy these cells and paste them, and I've got dozens of stocks in here that I've position size over the months. You just keep going down the list and copying and pasting. And what it does, I was going to position another stock and I got diverted here today. But here was Crocs today, and what it does is you put the high in for the prior day, you put the low in, and depending on the amount of capital you're risking, and I'm only risking a small number here, $250 on this trade, and what it does is it's telling me that my risk on this, if I use these numbers over here, is going to be 5.08%, and I'm only allowed to buy 122.25% stocks if I want to limit my loss to 250. So if I change this number to 122, then you can see it's both my target and my initial risk are the same amount, $250. So that's what I mean by if you're using this spreadsheet, you may risk a higher percentage, but you're still only going to lose $250 on this trade. So no, I don't go by 2 to 4%. I go by what the chart is telling me that I can risk. This over here is a 10-day ATR. I don't use it. Paul, do you still use the ATR mostly? I don't know if Paul's still here. Anyway, see this over here? I'm putting this in, and I'm going to update the spreadsheet for everybody. I just haven't gotten around to it. Maybe I'll do that before I give it to you, Perry. But If you're doing the probing shares, 40% of this trade over here, you could only buy 49 stocks, and then the additional buys would be at these levels. You can see it goes progressively up, and then I would move the stops up as these positions get filled. If they do, if they don't get filled, then I'm only owning 49 shares. You know, this isn't. I never take trades that small, but let's just bump this up here. Oops. Let's see if. And then my risk would be 500, and then let's see if this is going to calculate. I may have screwed up the formulas. No, this changed it, so I could now buy two. If I wanted to risk 500, then I would be able to buy 245 shares, and then you can see this all calculates out here. These probing stock shares, it would give you that amount also. Anyway, thanks, Raymond. I've got to go too. I hope this all makes sense to you. I know I talk about a lot of different things, and it may be confusing to some, but anyway, thanks for listening. I'll get this out to you. And I think I'll put these formulas in the spreadsheet before I get it out to anybody else, and I'll let the insiders know where they can download this. All right, thanks, Tom. Have a good weekend, and thanks, Tony. And we'll get to... good to see you, Pat. You're welcome. I really like these low-risk pivots, in case you couldn't tell. So give it a try, and this will all come together. Maybe after the first year, I may do another webinar series. I haven't really thought about it, but if there's interest, I'll do one. Thanks a lot for listening, and I'll see you online. Okay, bye now.